But even some of the banks are approaching their lows. SBI is down to 2250. ICICI Bank is approaching 1,000 rupees this morning. So these are pretty much the lows for the year for some of these names. Would you buy them here, Jakes, or will they form fresh lows, you think, this time?
The banking stocks? I think ultimately whenever the rally does emerge, I think it will have to be led by the banks. I think there's a serious concern on provisioning, etc., which has been sort of the thing dominating discussions. And my own assessment is, starting off with some of the private sector banks actually have posted decent results. And while public sector banks have disappointed because of additional provisioning, I think I definitely would be a buyer in banks at any point of an inflection. From a trading perspective, but even from a longer term perspective, I think SBI has a rights issue coming, so that may be a sort of temporary dampener, if you will. But usually around the rights time is when a lot of, I've seen in the past as well, a lot of foreign money does tend to come in, because that's the time when they can actually get, they can actually buy reasonably big. And I think some of the banks will bottom out sooner than the others.
The jaw-dropping move is coming from infrastructure, Jakes, and it's quite indiscriminate between the large caps and the mid caps. Is that value for you, or is there a problem there?
No, there is value for me. As I said, it's impossible to predict when these falls will get arrested. But my own sense here is that some of these are self-fulfilling in a sense, which is that people are selling because they feel it's going to fall, and it's just that the kind of headline coverage that these sectors are getting just for their falls is so kind of dramatic, if you will, that nobody really wants to go out there and brave the cold. I think somewhere along the line it will be led by promoters announcing buybacks, or promoters announcing, and it's happened in a few cases. I mean, Reliance Infra has announced a buyback, and the buyback continues from what I've been reading. Lanco, as I mentioned, I think has promoters doing creeping acquisition, and I think GMR has been doing some creeping acquisition. And while I'm not particularly sort of overly keen on some of these names from a investment perspective necessarily today, but I think from a value perspective one has to take a look at that, especially if you believe that some policy announcements which will foster project completions or new project announcements, then these will have to be beneficiaries. I have no doubt about that.
You track a lot of mid-cap stories, Jakes.
Right.
Where is it that you feel a deep value argument can be made at this point?
Quite honestly, and I think this kind of moves need to be seen isolated from individual mid-caps, but there are just a whole bunch of names in the market, and today I'm not particularly keen that we should be talking specific names, because I think the market, whether it's in the case of the banking space or in the case of infra, as we point out, are big spaces. See, I'll tell you what, if you really look at it, the market's found shelter, as it always does, in momentum. You've had the consumption stories just getting bought into, and you had Jubilant doing the run that it did, or you had some of the Nestle's and others continue to do the run that they do. Really speaking, my own assessment is, when the dust settles and new money comes in, some of these will start cooling off very perceptibly, and money will move into the deep value plays, which is whether it's in infrastructure, or whether it is in banking, or it's in some of the oil company names. And I'm very, very clear that ultimately long-term stable money is going to be made here. Some of the moves here are resembling seriously tech bubble kind of moves, where you have the 35 and 40 and 45 PEs being sustained for one reason or the other in the case of all these names I mentioned, and PEs of 6 and 7 being ignored. I don't think this can last for too long. The pharma space also has become, in some sense, a pocket of security. So people are finding security in buying these momentum names and selling into the infra names. And whenever crowds indulge in this kind of activity for any length of time, it usually is the beginning of the end, if not the end itself. So I think corrections in both these spaces, the undervaluation of the infra space and the overvaluation of the other spaces, will happen. Infra, unfortunately, had got bogged down. The final leg, if you will, if I may be brave enough to call that, is principally because of these new scam oriented things. Some of these are iron ore linked, some of these are the mining linked, etc., which until there is a little more clarity on that, they will continue to be in the eye of the storm. But really speaking, I think value is to be found where people ignore, and I think these spaces are crying out for attention. Look at Crompton Greaves at 160. Just 6 months ago, and I don't believe the market has discovered anything so dramatically new other than that there's a new airplane that's been bought and some shares were sold by an exiting chairman, which also was done from what we hear with full disclosure, etc. But be that as it may, even if you were to be uncharitable and say they shouldn't have bought an aircraft and they shouldn't have done this, but you can't take it down from 350 to 160. It's a great company. It's a very, very good story, and I think sooner rather than later the bottom here will be a very sharp bottom. Right now, maybe a lot of over ownership is just sort of puking out the holding, and I think give or take 5%, I would be at 150, 160 levels. I think Crompton will be a great buy in the market. So if you want to talk specifics, and I have no Crompton, I have no ownership on it, so maybe that's a disclaimer I want to make here. But I think Crompton, for instance, or a Lanco Infrastructure, we have no ownership on that again. I think would be a great buy. Even a GMR with all the ownership levels, with all the ownership of properties that it has, in terms of all the infrastructure plays they are involved in, I think it's a very good buy. So these are some very good buys. Even JP, for all the beating that people have done to JP, my own assessment is that enough is enough. I mean, somewhere along the line sanity has to come in, and I have no ownership in any of these, by the way. So
lucky you.
Well, lucky you say, but sometimes you just say that thank God that you were not sort of caught out in some of these. But in a market like this, Uday, let me be very clear, we don't really need to to use an uncharitable word, we shouldn't be really gloating over somebody else's misfortune. I think the real good fortune is that we weren't sort of caught out in this, but more importantly, I think everybody in their portfolio will see erosion in some form or the other. It may not be largely owned, but I think the important thing is to say that we just got you might be a little luckier that you were not in some of the stocks that have fallen the way they have, but who knows, yours the stocks that you own may also get killed. That's life, and
probably have in most people's portfolio.
Have in most people's portfolio, which for instance have not been talked about.
Yeah.
I mean, we have some stocks that have fallen 60-70%, and you're kind of nursing your wounds, but it's just that probably it's not talked about as much.
Sure. The stock of the last